Every once in a while, you get a week that's so jam-packed with economic news, it feels like it could set the tone for the next 6 months. Well, this is one of those weeks. We're talking about a rare event cluster, a super week where central banks, giant companies, and critical economic data all collide in just 5 short days. What happens here is going to ripple through the global economy for a long, long time. So you can think of it like a showdown. This is not your average week in the markets, not by a long shot. It's this high-stakes moment where a flood of new information is about to answer some of the biggest questions we have about inflation, economic growth, and the health of major corporations. Everyone's waiting for this. And just look at this schedule. It is absolutely relentless. It kicks off with German inflation on Monday and doesn't stop until we get key reports from the US and China on Friday. I mean, every single day is loaded. You've got major inflation data, earnings from pretty much all the tech giants, and interest rate decisions from 4 of the world's most powerful central banks. It's like trying to run a marathon at a sprinter's pace. Okay, so to make sense of this whirlwind, we're going to break it all down into 4 key arenas. First up, the big verdict from the central banks. Then we'll look at the economy's report card, which is based on all this new data. Third, we've got the huge test for big tech. And finally, and this is the important part, we'll connect all the dots to see what it all really means for you. All right, let's dive into our first arena, the central bank verdict. The big question here is simple. Are the pilots flying the global economy about to change their flight plan? And the main event, no question about it, is the U.S. Federal Reserve. Their decisions on interest rates don't just impact the US, they send ripples across the entire global financial system. So everyone is asking, after this long stretch of high rates, are they finally going to make a move? Well, the market seems to think it knows the answer. You're looking at an 85% chance of a rate cut already priced in. That's huge. It's practically a done deal in the eyes of traders. But, and you knew there was a but, the actual decision isn't the whole story. Not even close. The real action is going to be in the Fed's official statement and the press conference that follows. What they signal about the future, that's what's really going to move the markets. And you know, the Fed isn't operating in a bubble here. The European Central Bank, they're expected to hold rates steady. Why? Because they're in a tough spot. Inflation is getting close to their target, but their economy is really weak. Then you've got the Bank of Japan, also expected to hold. But everyone's listening for any tiny hint that they might finally move away from their super easy money policy. Meanwhile, the Bank of Canada will probably cut rates, just like the Fed, but for their own reasons. Their economy is slowing down pretty fast. See, each bank is fighting its own battle, but together, their moves will shape the flow of money around the world. And that brings us perfectly to Arena 2, the economy's report card. Right, because central bankers don't just guess, they rely on data. And this week, we're getting an absolute avalanche of it. This is the evidence that tells us if things are heating up or maybe finally starting to cool down. Now, we're going to see all sorts of numbers, GDP, jobs, manufacturing, but there is one number that stands above them all, and that's inflation. It is the number one piece of evidence that central banks are going to use to justify whatever they decide to do. And the biggest inflation report of all is coming from the US, trying to answer this one very direct question. After this long fight, has the Fed finally defeated inflation, or is it still lurking in the shadows? And this chart, this shows you the tension perfectly. We're looking at core PCE, that's the Fed's favorite way to measure inflation. Last month, it was super cool, just 0.1%. Great news. But the forecast for this month shows it jumping back up to 0.3%. Now, I know it seems like a tiny number, but that kind of jump suggests inflation might be a lot stickier than anyone hoped. This little uptick right here is exactly why the markets are going to be on the edge of their seats. And it's not just that one number. We're getting a full global health check. Is U.S. growth still booming? We'll see. Is the super hot U.S. jobs market finally cooling off? In Europe, the big question is whether inflation is truly under control. And for China, all eyes are on manufacturing to see if it's still shrinking, which is a huge signal for global demand. Okay, let's move on to Arena 3, Big Tech's Big Test. It's not all about governments and data this week. The biggest, most influential companies on the planet are stepping into the ring, and their results could either boost confidence or, well, sound a pretty loud alarm. And to get why this matters so much, just look at this. It's pretty wild. The handful of companies we call the Magnificent Seven make up almost a third of the value of the entire S&P 500. That means their performance has this huge, outsized impact on the whole stock market and on millions of people's retirement accounts. So yeah, when they report their earnings, everybody pays attention. And investors are laser focused on very specific things. For Alphabet and Microsoft, it's all about, are your massive AI investments actually making money yet? For Meta, its ad revenue tells us a ton about how confident small businesses are feeling. For Amazon, its forecast for the holidays is a direct window into how much you and I are willing to spend. In Apple, iPhone sales in China are a major tell for the global consumer. These earnings reports are like a real-time health check on the economy itself. So now for the big finale. Let's connect the dots. We've got central banks making moves, a fire hose of economic data, and earnings from the biggest companies in the world, all converging. Why does this 1 week carry so much weight?
Because it's a chain reaction. Think of it like a set of dominoes. First, the economic data comes in. It might be surprisingly hot or surprisingly cold. That forces the central banks to react to this new reality. Then big tech's earnings come in and either confirm or deny that story. And once all that information is out there, boom, global markets have to rapidly reprice everything, stocks, bonds, currencies, to reflect this new world for the next several months.
And really, two completely different stories could emerge by the end of this week. On one hand, you have the Goldilocks path. Not too hot, not too cold. The Fed cuts, inflation plays nice, and tech earnings are solid. That's the dream scenario, a perfect soft landing for the economy. But there's also the volatility path. That's where inflation is stubborn, growth slows down, and tech earnings disappoint. That creates this cocktail of uncertainty that could really shake things up. So we are heading into a genuine moment of truth, one that could set the entire market's direction for the rest of the year, maybe even longer. And the biggest question of all is, after the dust settles from this showdown, will we finally get some clarity, or are we about to get a whole lot more chaos? We're all about to find out.